Building a brand new dividend growth portfolio can sound like a daunting task. And without sugarcoating it, it definitely can be if you don't have the right information off top. Now, before we go through today's video and I show you exactly how I would start a portfolio, if I were to start over with just $1,000 invested. If you would consider yourself a newer dividend growth investor, I would definitely recommend you hit the first link in my description and grab my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So you have $1,000 and are looking to dip your toes in the world of investing in the stock market. Now, first off, the fact that you are even interested in this means that you have a good head on your shoulders and that you value things like delayed gratification, dedication to at least some degree. But with this $1,000, the next question you might have is, what in the world should I invest in? Now, in this short video, I'm going to break down all you need to know when it comes to investing your first $1,000 in the stock market. And I promise you, you will feel much more confident in investing it after watching this short video. Just make sure to stick around until the end of the video. Now, just a quick little background on me. I'm currently a 31-year-old business owner, and I currently have over 7 figures invested in the stock market. Now, this of course did not happen overnight. I've been investing for several years in the stock markets and started off years ago with just a single stock. Now, the first thing that I want to talk about when it comes to investing your first $1,000 in the stock market, I want to talk about risk tolerance and what it means. Now, according to investopedia.com, it says, what is risk tolerance? Risk tolerance is the degree of risk that an investor is willing to endure given the volatility in the value of an investment. An important component in investing, risk tolerance often determines the type of amount of investments that an individual chooses. Now, this is a very important thing to think about, especially in the early stages of your investing journey. You have to really talk to yourself and think hard and long about your actual specific risk tolerance. Now, this has nothing to do with what another investor's risk tolerance might be. You have to ask yourself, would I consider myself more of an aggressive investor that's not really all that afraid of taking higher risk? Or would you consider yourself more of a conservative investor that's not really willing to risk your money, even if there could be a higher outcome? Now, for me personally, I would consider myself not all that much of a risky investor. I like to take the slow and steady route, and I'm willing to shave off a few percentage points of possible potential returns in order to have a less risky portfolio that helps me sleep better at night. But there are other investors out there, even some of my personal friends that I would consider much more risky investors. Now, those type of investors might be willing to put their money at risk a lot more often than I am, and because of doing so, they might have higher potential upside. But risk tolerance is a very important thing to think about, and I would really like all of you to think long and hard about what your true risk tolerance is from day one. So now that we went over risk tolerance, which is again one of the most important things I think you should think about in the early days of investing, and especially when investing your first $1,000, the next thing you have to think about is if you want to invest that money in either an ETF or an exchange traded fund or a single stock. Now, according to Investopedia, it says an ETF, or an exchange-traded fund or ETF, is a type of pooled investment security that holds multiple underlying assets rather than only one. And an ETF is most of the time a basket of different stocks. And instead of just investing into a single company, you can invest into a large pool of companies. And the main reason on why I love ETFs and why many people choose to invest in the ETF path is because ETFs offer instant diversification. And because an ETF can own hundreds or even thousands of different stocks across multiple various industries. Because of this diversification, it lowers the risk, which once again goes back to risk tolerance. Now, on the other hand, if you choose to do so, you could of course buy into single stocks. You could buy into a share of Apple, you could buy into a share of Microsoft, Tesla, etc., etc. Now, the main takeaway when it comes to single stock picking is, of course, it can be risky because you're sort of putting all your eggs in one basket. And if I could honestly go back in time when I first started investing, the main thing that I would do is I would spend a lot more time investing into ETFs or different funds that have multiple different stocks within them. Because at least most of the time when investing into ETFs, you're spreading around your money evenly throughout multiple different stocks. Because I'll tell you, in the early days of my investing career, I was burned multiple times investing a little bit too heavily into some single stocks that for whatever reason I thought would do well. So now that we went over risk tolerance and whether or not it might be a good idea to buy into something like a single stock or an ETF, let's go over an ETF that I think could be a perfect potential investment for a new investor that has $1,000 to invest in the market. Now the ETF we're talking about is the Schwab US Dividend Equity ETF, or known as SCHD. And just to give you an idea of the size of this ETF, current AUM, or assets under management, is $48.33 billion. So there's a lot of money flowing into this ETF. Now the reason I think this ETF, in my opinion, is a perfect ETF, especially for more of a beginner investor, someone that's just trying to enter the market and sort of feel things out, the SCHD ETF offers a basket of holdings, some of the best companies in the world, and around 100 different holdings at that. Now we talked about a little bit earlier on why this is very important and why I think this is definitely beneficial, especially for newer investors, because even if a few out of these 100 different stocks within this ETF perform horribly, for the most part, hopefully the rest of them will do okay and hold up the ETF overall. Now, another reason on why I think this ETF specifically could be the perfect option for a newer investor looking to invest $1,000 is because this ETF pretty much offers a little bit of everything. This ETF has grown in ETF price over time, which means investors that bought into it historically have, for the most part at least, had their investment move up in value, at least if they've held long term. Also, this ETF has a very cheap expense ratio of just 0.06%. So by buying this ETF, you are going to be charged a fee, which basically all ETFs out there have. But with SCHD, the fee is very, very cheap. Now, even though SCHD has been moving up in price pretty consistently, at least historically speaking, it also offers a dividend. It offers a dividend that is paid quarterly. So every single quarter, if you own shares of this ETF, you are going to get paid a dividend. But wait, it gets even better. The dividends, at least historically speaking, have been getting bigger and bigger also. So let me break this down for you. Investors that buy into SCHD, at least this is historically speaking, have made money on the ETF price moving up over time, but have also been paid a quarterly dividend consistently. And on top of that, they have been getting paid a larger and larger dividend as time goes on. Now, by all means, I'm going to be the first to tell you there's going to be other ETFs or even single stocks out there that might grow a little bit faster than that of SCHD, for example. And there's also going to be ETFs and single stocks out there that offer a larger, higher dividend yield to start. But when it comes to finding sort of that perfect mix, a stock or ETF that offers growth potential in ETF or share price, but also pays a decent starting dividend yield and at least historically has had dividend growth, I think the SCHD ETF crosses off pretty much everything. And if I could go back in time when I had my first $1,000 to invest in the stock markets, I would have definitely spent the majority of my money investing into things like this until I really fully understood how all the stock market mechanics worked, because I'll be honest, it does take some time to get the feel for things. Now, another great investment, at least historically speaking, for an investor investing their first $1,000 in the stock market could of course be the S&P 500, which is made up of basically 500 of the best companies in the world. Now, once again, my answer goes back to an ETF, because I truly think for an investor that's just getting started, I truly think that it's worth investing into ETFs because you are spreading around that money so much further. And once again, if I could go back in time and correct all the mistakes I made at the beginning days, I would have never invested into this stock and that stock and that stock. I would have invested into super high quality ETFs that are made up of multiple different stocks, sometimes hundreds of different stocks, instead of putting all my eggs in one basket and seeing this stock or that stock move down in price, because let me tell you, in the early days, that's definitely going to happen. Now, don't get me wrong, if you're an investor out there that has a higher tolerance for risk, by all means do whatever you want and invest in single stocks, and only time will tell if or if not, that would be the better option. But the number one thing to ask yourself, especially if you're just entering the stock market, is to ask yourself, what is my risk tolerance? What would I be okay with losing? Look at how different stocks or ETFs have performed over time, and I'll tell you one thing for certain, stocks and ETFs don't always go up. Even though historically speaking, a lot of the top names have long-term kept on moving up in price, past performance does not indicate future performance, although it does sort of give you an idea of what you could, consider. So that gives you the gist of it on where I would invest my first $1,000 if I was starting all over, and I really hope this provided some value for those investors just getting started. But now I want to hear from you guys down below if you were or if you are investing your first $1,000 in the stock market. What stock or ETF would you buy into? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.